Hey everyone, welcome to another weekly market forecast for the week ending March 18th, 2022. My name is Justin Bennett with Daily Price Action, and in today's forecast, we are going to talk about the euro, the pound, the dollar yen, the dollar versus the Swiss franc, and also Ethereum. So we have a lot to talk about today. And at any point in this video, if you do enjoy the content, be sure to subscribe to the channel and click the bell icon to get notifications, because in addition to posting these weekly videos, I'm also making videos every single weekday. Now, lastly, none of the content in this video or any video is ever financial advice because it is just my opinion. So with that said, let's take a look at the Euro USD. So this is the monthly time frame, and this is the long-term ascending channel that we've been looking at now for the past couple of weeks. Okay, so you can see where the Euro USD has moved within this channel ever since really back here in the early 2000s. So for the past 20 plus years, this channel has outlined the price action. Now, obviously this is a very long-term pattern, so we're not going to get any immediate setups from this. However, if we look at the daily time frame, all right, this is very much a story of the euro being trapped between immediate support and resistance. So last week, one thing I was looking for was a potential move off of this low down here, okay, and a close back above 110.80. Now, the reason I was looking for a close above that level, okay, and not shorting it from 110.80 is the fact that this rally here on March 9th was very aggressive. It was also an immediate retest of this level following the breakdown. Okay, so a lot of times when you see a breakdown like this and then you get an immediate retest, okay, almost like a V bottom, this tends to be a false break. All right, but we didn't see the Euro USD close above 110.80, and in hindsight, a short from there would have been very profitable, but of course, hindsight is always 20/20. So going forward, guys, I wasn't necessarily wrong on this just because I knew that 110.80 would be strong resistance, and it absolutely was. Okay, but the market never closed above this area, so we never got that daily close above it to go long for a move up toward 114.80. So at the moment, this is very much a story of the euro being trapped between this area around 108.50 and also the 110.80 level. Okay, so this is going to remain resistance for the coming week. We would have to see the Euro USD get above this level on a daily closing basis to expose 114.80. That is the only way, in my opinion, that we are going to see the Euro USD move back toward these recent highs. Okay, now alternatively, if we see the Euro USD close below this level down here, okay, that multi-decade support right around 108.50. Okay, let's say 108 to be a little conservative here because that is the recent low. But if we were to see the Euro USD close below this area, then we would be looking at some of these recent lows that have been carved over the past few years. All right, so here you can see that we have a couple of key levels to keep an eye on the way down if the Euro USD does break below the 108 area. So the first one would be 106.50 and the second 103.50. But despite how weak the euro looks right now, I would be very hesitant to short any close below this area. And the reason for that is just because the market is getting a little bit overextended right now. You can even see that on the weekly time frame. So for the past few weeks, okay, this is 1, 2, 3, 4, 5 weeks now, we have seen the Euro USD close in the red. So at some point, a relief rally here is likely, whether that comes down here at 106.30, okay, or we get it from the 108 area this week. I just think that this market is getting a little bit overextended, and I would not want to short a close below here, okay, without some type of rounded retest. All right, in other words, if we got the close below this trend line down here around 108.50, then potentially look towards something like this, where we get a rounded retest of this area, and then you'd look for a short from this region. Of course, that's not financial advice, but that is something that I would entertain. So as of right now, I do think this is a waiting game just because the market is caught between support and resistance, unless, of course, you're more comfortable with short-term trades like a scalper or even playing these short-term swings here on the intraday charts. But for me, I'm a daily time frame trader, so I like to look for, confirmed breakouts from areas like this. So right now, for me, this is kind of a no-go. I'm waiting for either that daily close above 110.80 or below the 108 area. So next we have the pound. So GBPUSD, it is approaching a level that we've discussed here recently. So last week we saw the pound get below this area right around 132, okay, 1.32. This was support back here. You can also see where going back to 2020, you can see where it was resistance through here and then support. Okay, so this area is going to be key going forward. It's going to be resistance now for the pound right around 132. Now, support at the moment, okay, comes in between 1285 and 1295. So this entire area down here is going to be critical support for the pound. The reason for that, all right, if we look at the weekly time frame and just move out here, you can see where 1285 has been a factor for the pound going all the way back here to 2016. Now, it hasn't been the cleanest level, okay? But then again, we have had a lot of sideways choppy price action from the pound over the past few years. But you can see where this level clearly has served as support and resistance in the past. Okay, so it is going to be a key factor on the way down. And furthermore, if we look here from the 2020 low all the way up to the 2021 high, notice where the 50% retracement is, okay? It's right through here, difficult to see, but it's right around 1285. Okay, so this is going to be the 50% retracement, and it's also very close to that descending channel support. And this is another pair too, just like the Euro USD, where the market is getting a little bit overextended because on the weekly time frame, this is now the third weekly red week in a row, and it's also a very noticeable one. Okay, it's a very significant loss for the pound here over the past 3 weeks. So at some point we should expect some type of relief rally, and in my opinion, all right, this area between 1285 and 1295 is a very logical area to expect that. So what I would maybe look for is a move, an exhaustion move down here into this area, and then look for a potential long in this region for a move back here toward 132. Okay, so this would be a counter trend trade, but again, I think the market is getting a little bit overextended here, and so I do expect some type of relief rally in the coming days and potentially from this 1285 to 1295 area. So next up we have the dollar versus the yen. You can see where the market has been moving within. This is technically a rising wedge, however, it is a very slight rising wedge. So it's not necessarily what I would call a bearish pattern or an exhaustion pattern for buyers. But at the same time, the market is approaching this resistance level up here. Okay, so right around 117.50, and this extends all the way up to 118.50. So just like the pound that we just discussed, we have a trend line in addition to a horizontal level that come in pretty close to one another within about 100 pips. And the reason for this is if we look at the weekly chart, you can see where the dollar yen back here found support, okay, right here at 118.50, and then it found resistance here. So the market has not traded above 118.50 since all the way back here in 2016. So this is going to be a very significant area for the market. And it's one that if we were to see an exhaustion move into this area, all right, and by that I mean if we see the dollar yen open the week and just continue this rally up here, then I may look for a short from this area as a very quick mean reversion play, meaning that the market is getting overextended, and a move up into this region, we could get a very quick aggressive rotation lower and potentially a retest down here around 116.30. All right, but this is going to be support for the dollar yen over the coming days. So alternatively, if we see a rotation lower first this week, then this area is going to be support. So not a lot to do here for the dollar yen, at least at the moment, just because the market is too close to that resistance area to try to long, and it's also too bullish right now to try to short. But like I said, if we did get an exhaustive move into this area up here between 117.50 and 118.50, I may look for a small short position from that area for a quick mean reversion play. So next up we have the dollar versus the Swiss franc, and this one is very interesting because I mentioned it last week and it has formed this year-long triangle pattern. Now, at first, it looked like it was going to take another few weeks and potentially even another month or two for this pattern to break out. However, Friday closed above resistance. So this is going to be key going forward. We need to see this area right around 932, okay, 0.932, hold as new support. So you can see back here, this level was resistance for the market as it coiled within this triangle pattern that on Friday we got the close. Now, here's the thing about Friday closes though. They can be a little bit speculative just because volume tends to dry up before the weekend. So this move right here was on lower than normal volume. So you have to be a little bit cautious with that. All right, so what that means is I'm going to be looking for bullish price action from this area down here. I want to see the market react to this area, okay, bullishly, positively in this area and hold above it on a daily closing basis. As long as it does that, then I do think the dollar versus the Swiss franc is probably headed up here toward 937. All right, that's going to be the next test. And like I said last week, if it can hold above this new support area, okay, following Friday's breakout, the objective for this, based on the height of this pattern, comes in all the way up here around 992. All right, so this could be a very significant move for the dollar versus the franc over the coming weeks, as long as it holds above that 0.932 level on a daily closing basis. But just keep in mind here that given Friday's breakout and the fact that it was pretty much a straight up move, and it has been here over the past week, and the fact that we have the 937 resistance level just above Friday's breakout, keep in mind that there is a good chance that we see a retest of this area as new support first. And in the event that this pair retests 932 and closes back below it, okay, so if we were to get a daily close back below this level over the coming week, then it would indicate this up here was a false break and would send the pair lower, likely back here toward this support area. Okay, so keep that in mind as well, that just because we had a breakout on Friday does not mean that it is a guaranteed follow through from buyers. Okay, we do have false breaks in the market. This could be one of them. However, at the same time, you have to respect what the chart is telling you today. Okay, not what you think it might be tomorrow. And right now, this is a confirmed breakout. And lastly, we have the Ethereum chart, which I talked about on Friday, and it too has formed a symmetrical triangle. So you can see here that off of these highs from November, all right, this market has made a series of lower highs over the past few months. Ethereum has not been able to carve a higher swing high ever since November of last year. And that's significant right now because I think that the first higher high here is going to send this market potentially up toward $3,600. But the key here, and this is what I talked about on Friday, is getting above this trend line up here right around $2,800. So we need to see Ethereum close the day up here in order to confirm this breakout. From there, $3,000 would be next. And alternatively, if it closes below this trend line support down here right around $2,500 on a daily closing basis, then $2,300 would be next. Okay, that would be the next support area, followed by potentially toward $1,700. Now, one thing before we talk about those levels in more detail is that this lower level, at first glance, it looks like this just extends from the January low. However, if you move out to include the 2020 price action, what you're going to see is that this trend line extends off of the February 2020 high right before we had that March crash. So this level during the last part of the bear market served as resistance for Ethereum, and it's now serving as support. Okay, so this is going to be a very critical level to watch here over the coming days. And speaking of those levels, okay, so 1700 you can see was support back here in mid 2021. All right, so it was support for the market, and this area up here around 3600 was support back here, okay, right before Ethereum broke below it. Okay, so I do think that a breakout from this terminal pattern is going to send Ethereum either higher or lower by 30%. Now the key there, okay, is going to be waiting for that confirmed breakout, as I said. So basically get above 2,800, and we are likely looking at a move up here toward 3,000, if not a 30% move up toward 3,600. And alternatively, get below 2,500, we're looking at a move down here toward 2,300. All right, and then also potentially a 30% move down toward 1,700, which was the lows back in 2021. Now, one last thing here, okay, and this is not financial advice, but this is the way that I'm going to play this. I'm not going to wait for either a close above 3,000 or below 2,300 to play this. So instead of waiting for a move above here or below here for that confirmed breakout, I'm going to play this in stages, okay, as I normally do. I typically scale into positions, and this case would be no different. So if we see Ethereum close above this area up around $2,800, then I would buy a little here, okay, on a daily close above this area, and then buy the rest on a daily close above 3,000 for that move up toward 3,600. Same thing if we get a break lower. If we see a daily close below 2,500, I would sell a little bit here, okay, short a little bit here, and then also on a daily close below 2,300. Okay, short a little bit more here for that move down toward $1,700. So you're basically playing this in stages, and the reason for that is because false breaks do happen. So even if we saw Ethereum close above this area or close below this area down here at 2,500, that could be a false break. Okay, and in that case, as long as you're putting on a partial position at first, even if it is a false break, okay, from the market, you're not going to have that full position on, so you're not going to experience a full loss. So that's why I always scale into this, because we have resistance up here, support down here just beyond this triangle pattern. So by scaling in, I'm able to mitigate any losses here in case it's a false break. All right, so that's it for today's weekly forecast. I hope you found the content helpful. And if you did, be sure to hit that subscribe button and also click the bell icon for notifications. Smash the like button and leave your comment below. I hope you guys have a great weekend, and I will talk to you again on Monday.